CBA's economic warning. Let's have a look. Hello everyone, Florian here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's check out this article about an economic warning from the Commonwealth Bank, everyone, even though their shares are doing bloody good at the moment. So, Australia's biggest bank warns of economic downside as profits dip. Really? Their dividends seem pretty nice. Okay, sure. So, Commonwealth Bank of Australia on Wednesday warned of the downside economic risks building in Australia from continued high interest rates and persistent inflation, as the country's largest lender posted a drop in its first half profit. The bank's profit, which still beat expectations, I thought it was good, it was beating expectations, came a day after mortgage lending challenger Macquarie Bank said it was gaining market share and signals a tough year for Australia's big four banks as they enter an environment of lower margins and fees. Yeah, let's see if that actually happens, guys. As cash rate increases have a lagged impact on households and business customers, we expect financial strain to continue in 2024 with an uptick in our arrears and impairments, CEO of CBA, Matt Cummins, said in a statement. Shares of CBA fell 2.4%, with the broader Australian index down 1% as of 2:55 GMT. I mean, I have some CBA shares, guys, and I don't even check it day to day. I'm assuming a lot of you are, if you're not a trader, not trading every day, not trying to make your money in fluctuations in the market, which is a lot of work. It's a lot of work, and people turn that into a full-time job. So when you're busy, when you've got a real profession, that you're flat out, you don't have time to really do that, do you? So I'm just looking at it going, oh, fantastic, it's up. Great. Since the last time I checked. Maybe it's just me. Well, that's really a habit I've had to cultivate, particularly since, in 2017 and when I was playing in crypto, and you just watch it just go insane all over the place, and you're following it and you're checking it so many times. So he said in a briefing after the results that the rising cost of living was being felt and in an increasing number of households and businesses, and as a consequence, customers had reduced their spending. True, I could agree to that. Anecdotally, today I went out with my son. We went for Dad Sunday, and I took him to a comic book shop in the middle of Brisbane. So to do that, I had to drive right into the city, park in what used to be the Myer Centre, but isn't anymore because the Myer Centre's gone. It's now uptown, I think. And parking has increased by 10% on a Saturday. It used to be $10, now it's $11. And comics were quite expensive, but I guess, it's been a long time. I used to buy them secondhand, little crappy ones. But everything was flat out, at least here in Brisbane. There were people everywhere, people eating everywhere, businesses open. This is just the Saturday morning. So I'm wondering, inflation is falling, okay? The rate, when they say inflation is falling, it does not mean prices are coming down. Don't fall into that trap. It means the rate of change is coming down. Prices are still going up. Everything's still getting more expensive. But the rate that they're getting more expensive is coming down to a more manageable rate. So the stuff still it's really expensive. I mean, we went out for lunch. The two of us at a burger place in the city. It was not cheap. It was like $50, rounded up. Okay, you go out for a meal, lunch in the city in a fast food place. And okay, this is probably a bit of a wanky one. It's getting more expensive. Told analysts and investors on the call. What else? We expect economic growth to fall below 1.5% this year. Our base case remains a soft landing. And we're expecting these pressures to ease as inflation and interest rates start coming down later this year, he said. CBA's profit reflects the earning challenges Australian banks are facing from higher costs and a contraction in net interest margins. Daniel Yee, Vice President for Moody's Investor Services, said in a note. We expect headwinds to persist in 2024 as tight competition for both lending and deposits weigh on banks. NIMs and operating costs increase further as the effects of elevated inflation are longer, he said. For the 6 months ending December 31, CBA's profits fell 3.1% to $5.02 billion, from $5.18 billion a year earlier, as intense mortgage competition and higher expenses due to inflation squeeze margins. Despite that, the cash profit came in above a visible alpha consensus of $4.95 billion. Before the result, CBA's shares jumped more than 20% since November, outshining a 12% rise in the wider market on the back of some investors fleeing China's battered markets and others switching to equities on expectations of interest rate cuts. Interesting. Coleman, however, said the bank's valuation was driven by consistent profitability and by the fact that it was very large and had by far the strongest deposit base in Australia. UBS analyst John Story said in a note that CBA had needed to deliver a strong set of results given the recent share price rally. Despite not living up to expectations, CBA delivered $5 billion in cash NPAT at a point in time when the bank has endured extreme levels of pricing pressure in mortgages and deposits. If the mortgage market rationalizes, CBA is well placed, Story added. CBA's home loan portfolio shrank to $582 billion at December end from $584 billion at the end of June, while Macquarie's grew to $117.9 billion at the end of December from $114.2 billion at the end of June. CBA's net interest income from continuing operations on a cash basis slipped 2% to $11.4 billion as its net interest margin declined 11 basis points to 1.99 versus the prior year period. The bank's common equity Tier 1 capital ratio stood at 12.3% as at December end, slightly above 12.2% at the June end. It declared an interim dividend of $2.15 per share, up from $2.05 last year. So there we go, everyone. Let's have a bit of a chat about this one, eh? So it's interesting looking at this, particularly when we've seen other banks start to decrease rates, planning for lower rates later in the year. We'll have to see what happens. There'll be more competition between the banks, which as a consumer can only be a good thing. That's what we want to see. We want to see the banks competing. We want to see the banks fighting for our business. So, I mean, are you worried about this economic downside? Not really. Depends what industry you're in. And make sure you've got a diverse collection of revenue streams. Anyway, guys, let me know your thoughts and opinions on this one, and I'll see you next time. Bye for now.